You've tuned into the deep dive. Today, we're really getting into data interpretation for trading,
Mm.
specifically focusing on those sources you shared with us.
Yeah,
Our mission basically is to pull out the really critical data points, the ones that can help you make smarter decisions without, getting totally swamped.
exactly. Let's jump right in. What's clear from the material is how these different bits of data, they sort of layer up to give you the market picture. Maybe start with the most basic price data.
Right, yeah. The open, high, low, close the OHLC over different times, plus that live second-by-second feed. It's the raw market action,
Yeah,
supply, demand, sentiment, all that.
precisely. And you've got historical price showing the big trends, the context, while the real-time stuff, that's the immediate opportunity or maybe the immediate risk.
Uh-huh.
A key thing your sources mention is watching levels. Like if a stock keeps hitting, say, 50 rupees and bouncing, that's potential support.
Okay.
Now, if it drops towards 50 again and you see volume picking up, well, that makes a bounce more likely. Think of volume as like the market's conviction.
Got it. So you see that on your chart platform? Price nudging support, volume climbing. Could be a signal to buy, betting on that bounce. Now, volume itself,
Right.
just the raw number of shares or contracts traded, that's super important too, right, for confirming moves.
Oh, absolutely critical. A price breakout, moving past a resistance level, it's way more believable, more reliable if it happens on heavy volume.
Right.
If you see a big price jump but the volume is tiny, be careful. Might just be a blip, might not stick.
Okay.
And another thing, sometimes you see these huge volume spikes right at the end of a long trend. That can signal exhaustion. Maybe a reversal is coming.
Interesting. Okay, so price and volume are kind of noisy day to day. To filter that, we look at things like moving averages, right? Like the 50-day, the
They
200
just
days.
smooth out the price action, help you see the underlying trend more clearly, cut through the daily chop.
And there are signals within those.
Yeah, definitely. The classic golden cross, that's bullish. It's when the shorter MA, like the 50-day, crosses above the longer 200-day. The death cross is the opposite, that's bearish.
Okay.
And even just the slope, the direction the MA is pointing, tells you about momentum. Plus, the MAs themselves often act as sort of dynamic support or resistance levels.
Right, places where the price might react.
Yeah.
Okay, then there's the RSI Relative Strength Index. That's the momentum gauge, 0 to 100, tells you if something's maybe overbought or oversold.
Yep. Generally, above 70 is considered overbought, potential pullback territory. Below 30, oversold, maybe due for a bounce.
But it's not just the number itself.
No, exactly. The divergences are often more powerful. So maybe the price hits a new high, but the RSI fails to make a new high alongside it.
Huh.
That warns the upward momentum might be fading.
Oh, okay.
But crucially, don't use RSI on its own. It needs confirming, maybe with price action near support resistance or, again, volume. Selling near 75 RSI at a known resistance level, a stronger signal.
Makes sense. Confluence, right? Putting signals together. Okay, shifting gears a bit, the bigger picture stuff. Economic data, news events.
Oh yeah, those can move markets instantly. Think interest rate decisions, inflation reports, GDP numbers, even specific company earnings reports?
Right, like rising rates usually aren't great for stocks, generally speaking. Good earnings can send a stock flying.
Exactly. And surprises, things the market wasn't expecting, they tend to have the biggest impact. So keeping an eye on an economic calendar, knowing when earnings are due, it's just sensible risk management.
Definitely. Now, let's dip into futures and options, F&O data. Seems a bit more complex, but the sources highlighted it. We're talking open interest, put-call ratio. What else?
Max Payne, implied volatility.
Yeah, yeah.
They give clues about market positioning and expectations.
Okay, break those down a bit. Open interest or OI?
So OI is the total number of outstanding contracts, futures, or options that haven't been settled yet. It shows where the money is committed. Rising OI with rising price. That suggests new long positions, bullish conviction.
And if OI rises but price falls?
That suggests new shorts are coming in, bearish pressure building.
Got it. What about the put-call ratio, PCR?
That's just the volume or OI of put options divided by call options. Gives you a sentiment gauge. A high ratio, like above 1, might mean more people are buying puts for protection, or betting on a fall could be bearish sentiment. Below 1 might mean more call buying, more bullishness. Extreme readings often signal potential reversals, though.
Okay. And max pain? Sounds ominous.
Yeah, it's the strike price where if the underlying asset finishes exactly there at expiry, the option sellers collectively lose the least amount of money. Theory is price sometimes gets kind of pinned near that level as expiry approaches.
Interesting. And implied volatility for?
That's basically the market's forecast of how much the price is likely to swing around in the future. High five means big moves are expected, maybe ahead of earnings or an event. Low IV suggests stability is expected.
Right. We also need to touch on FIIs and DIIs, the big institutional players, foreign and domestic. Their flows matter.
Hugely. Their daily net buying or selling figures, both in cash market and F&O, are widely watched. If both FIIs and DIIs are buying heavily, that's usually a strong bullish signal for the market overall.
And if they're doing opposite things?
Well, if FIIs are buying but DIIs are selling, maybe it's short-term bullishness driven by foreign money, but domestic players are taking profits.
Mm.
If FIIs sell and DIIs buy, it shows some underlying resilience. Domestic funds absorbing the selling. Both selling is obviously quite bearish.
Okay, let's circle back to open interest for a second. You mentioned it with F&O.
Hmm.
It really seems key for understanding the conviction behind a move, doesn't it? Whether it's new money coming in or just old positions getting closed out.
Absolutely. Rising OI really confirms the strength of a trend. Price up, OI up. Strong bulls. Price down, OI up. Strong bears piling in.
I'm falling OI.
Falling OI with rising price. That could be short covering winners buying back to close their positions, which pushes price up but isn't necessarily new bullish conviction. Falling OI with falling price suggests longs are liquidating, getting out.
And for options specifically, looking at OI at different strike prices.
Yeah, that's super useful. A strike price with very high call OI can act as resistance because lots of people have sold calls there. Conversely, high put OI at a strike can act as support.
Wow. Okay. So putting it all together, understanding price, volume, the MAs, RSI, the news context, F&O data like OI and PCR, plus institutional flows. It really does give you a much richer view of what's actually driving the market action. This deep dive has been great for making sense of all that source material.
Glad it helped. And thinking about how you might use this, considering that interplay, especially between, say, price, volume, and open interest, what single piece of data jumps out at you now as maybe the most revealing about market sentiment? And how might you start folding that more consciously into your own analysis? That's something to chew on.
Yeah, good question.
We can definitely dig deeper into specific strategies using these tools next time, if that's helpful.